What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be talking about Lyft stock because in the last 3 months, this stock has gone up 91%. And the big news for this company is that they are partnering with robotaxi companies to bring a robotaxi network to their platform. And a couple months ago, I made a video talking about Tesla and, when they were coming out with their robotaxi business, I said Uber and Lyft, if they want to keep up, they need to do something like this and also offer this technology if they want to keep up with Tesla. So now we see Uber and Lyft partnering with these other companies, and I think this is a great move on their part, and that makes sense why the stock is up 91%. So this market cap is $7.2 billion. Now keep in mind too that Lyft has, I believe, only 25% of the market share for self-driving. I'm pretty sure Uber has 75% roughly. So I'm still not a huge fan of this stock. I still would not consider investing into it because, okay, for one, they cannot report a profit. And I'm always surprised when I see companies who do billions and billions of dollars of revenue and still can't make any net income. They still can't make a profit, which is, it kind of proves that it's a bad business because, if you have to make $1 trillion just to become profitable, that's not a very good business then. That means you're going to have endless struggles for the life of the business because they're already scaled to a solid point, right? This is not a new startup. This company has been around since 2007, and they're doing, they're going to do close to $6 billion of revenue this year. So it's like, why are they still losing money right now? The profitability is getting better. Okay. It's not like they're losing 1.5 billion like they were a year ago. Now they're only losing what? Minus 65 million. Okay. So it's not as bad, but it's still not an ideal situation. So then we look at their balance sheet. The equity over the last 4 years has gone from 1.6 billion to 1.3, 388, 541. Okay. So it's come down a lot from 2020, but it's a big improvement from 2023, right? Right now we're sitting at, as of the end of June, we're sitting at $577 million. Then we look at the valuation. Once again, we can't now is roughly this company has been as high as 1.6 and as low as 0.8. And so 1.1 is probably fair. But again, if it was just Uber and Lyft in the space, it would make it somewhat more compelling. But the fact that we're going to have Tesla in this space now for these upcoming years, I don't know. I see Tesla and Uber. I could see Tesla and Uber being at the top, and Lyft, they're going to be lucky if they can keep that 25% market share. I think they're going to probably drop down to 10% market share or something. So that is my analysis for Lyft stock. In terms of growth, I would say, let's see, revenue growth is expected to do 30% this year, which is fantastic, but 14% next year, not so good. And then it shows their EPS positive, which, we want a full year of profitability. And so not an ideal situation. But that is my analysis for Lyft stock. Thank you very much for watching, and I will see you guys in the next video.